Alright, quick update on inverse finance. So if we start off with what's going on in the lower time frames, if we go over to the 1 hour, you can see these 1 hourly EMA ribbons have been, a nice area to kind of short every time we crash into the long-term moving average. Now, these EMA ribbons fired bearish on the 2nd of April. Ever since then, we've been heading down, coming back up, having dead cat bounces, and running into these EMA ribbons, which are proving to be very strong support before we do come down and form a lower high lower low trajectory. Also, if we look at what's going on the 1 hourly squeeze mom, which is the squeeze momentum indicator, we reset the bearish momentum after having this dead cat bounce just up into our original 786 Fibonacci, which I've had to move down as we've invalidated it, but nonetheless bearish momentum's been reset and we're starting to pick it up again on the 1 hour. So the 1 hour and I believe the 4 hourly are telling me that the bounce has already happened and bearish momentum has really been reset. Even on the 4 hour you can see the squeeze mom turn dark green, or dark red rather, meaning that the bearish momentum is starting to subside. We came back down, we didn't come down to the heart line, but we definitely reset a lot of the bearish momentum after this huge fall off the table. Once we flipped short on these EMA ribbons up here at 370 and fell all the way down to 274. So the bearish momentum's been reset. We're starting to pick up light red candles on the squeeze mom, and they're starting to pick up quite fast. So even though we don't have volume coming in right now, I think we're going to see that volume come in as soon as we break below this 786 Fibonacci down here at 269. And both my gut feeling and the charts are kind of pointing to the fact that bearish momentum is picking up so fast that I kind of have to assume this 786 down here at 270 is going to be invalidated. Now, yeah, I mean, really the 4 hour paints it very nicely. Ever since we flipped short on this, we completely landslided. And we've really got this formation right now of lower lows, lower highs. Well, we had another lower low before we made lower highs. Or lower high, lower low, lower high, lower low, lower high. And now I have to assume that, the next lower low is going to take us below the 786, which is going to put us below $270, invalidating this entire Fibonacci that we've got in the short term running on inverse finance. Now, originally, I think we had our fib all the way up to here, and we had this support box. We've had to move it a few times because we've broken so many supports recently, but you can really see we're emming out very nicely. We lost the original 786, so we really only have the 786 to the daily candle close to go, and we've fallen through every floor. We're seeing emming patterns, and while they're not a perfect M, you don't have to have a perfect M to have emming patterns. What we're seeing is these M's, carrying us down, and obviously the inverse of that would be a W pattern. Not, once again, they don't necessarily have to have higher lows on W's to be Wing out, and for M's they can do something like this where they can have a higher low and then still be M'ing out to the downside. Whenever you see these kind of M patterns, it's not good either way, even though it's not a perfect M. For example, this isn't the most perfect M that I've seen, but right here, this is a perfect M, especially on the candle bodies. We've got a nice lower high on that one. I'm personally not going to take the price target of it, because I think the most major thing that we need to focus on is this box of support that we've got down here, where this orange line is the first bit of support coming in at this local low at 274. I think once we take that out, it's going to be pretty concrete that we're going to be coming down to sweep the lows. But really your last line on the sand, last line in the sand is $270. That's your 786 Fibonacci. If we have a daily close below 270, I have to assume we're coming down to at least 215 to sweep the lows, and that would be a 21% trade to the downside. So all in all, the bigger picture that I'm seeing, tying everything in a neat bow, is the lower time frames, the 1 hourly and the 4 hourly, they already look like they've had their dead cat bounce, and momentum on the squeeze mom and the EMAs is really starting to pick up to the downside. So I do have to assume, my gut feeling and the charts are telling me that this $270 isn't going to hold, and we are coming down to sweep the lows at 215. I could be wrong, but once again, 270 needs to hold. I mean, if we don't break break below 270, which really isn't too far away from where we are now. So I assume we're going to have an answer on this very soon. If we have a strong bounce off 270, you know, so be it. We could be turning the market momentum around, but in the macro term, I really see, if you see every time I've got a circle here, you can see the all-time high on this chart, lower high, lower high, lower high, lower high, and we have a formation of macro lower low, macro lower low, and you know, it does seem to me all kind of points are pointing towards maybe not necessarily coming down to the 1.618, which this fib would be targeting down here at $57, but I'd at least have to assume, you know, we're going to come down to somewhere on this trend line, perhaps around 125, 150 is a more conservative target, before we do have a push up. But honestly, until this lower high, lower low trajectory is taken out, I can't be too bullish on inverse, especially when we're on these daily EMAs and they've never flipped bullish. So, you know, the market structure is really telling me to be cautious right now. All the momentum indicators are really fastly picking up to the downside, and the last time we had momentum shifting, you know, past this point here, we carried it a very, very long way down. So I do think, unfortunately, inverse potentially has another flush out on its hands. Potentially, if you're lucky, really a little bit of copium for the bulls here, but we could just be coming down to sweep the lows at 216. But my gut feeling is really saying if 270 doesn't hold, we're coming down to at least 216 before we have a dead cat bounce. The general, more macro market structure is telling me that we are going to be, you know, taking out these lows in the next couple of weeks. And once again, I could be wrong. As long as 270 holds, then this move to the downside isn't going to happen. This is just a scenario. But the second we start putting in 4 hourly and daily closes below 270, you know, I have to be short and I have to assume that this is going to come out and at least take out the lows. So that is all I see for inverse finance. Really not looking too good on the higher time frames, especially as momentum has been reset in the slightly lower time frames and could be starting to have a snowball effect down through this $270. So keep your eyes on 270. If we never break 270, we're still bullish. But yeah, honestly, not looking the greatest right now. That's all I see for inverse. Best of luck. None of this is financial advice. And yeah, cowboy out. Peace.